Welcome everyone. It's time for a morning routine video live stream today. So what's up? So we're gonna do the same stuff as you have seen previously in the morning routine videos, but of course I am live now, so if there are any questions, feel free to ask. And we're just gonna go through everything now. So let's get it started, I suppose. Also, happy Halloween, by the way. I wonder if any of you is going to do something during Halloween. I mean, you know, in France, Halloween, it's not necessarily a big festivity, but there's definitely some things going on here and there. So probably tonight we're going to check out there's something fun somewhere. Good morning, Sam, Benji. Good to have you guys here. What's up? So yesterday was a busy day. You can see all the scenarios that I have over here on the right. Those are the ones that I already posted in the Bitcoin's updates section as price was moving to the downside on its way to take out this particular low. So it's interesting because it just gives a general idea of the scenarios at play, and based on the different scenarios one can basically create general guidelines of like, well, if this high or low is taken, it means that, you know, probabilities are higher. We're going to be for bulls in a larger range, or for bears you're going to move down. We'll go through these in a second, not necessarily in great detail because it's more about the context the scenarios create. Now also last night Dani accurately said like, yo, there might be something going on here. So if I go to Discord for a second, lounge, then last night Dani was saying this, like just a photo, but the photo itself of course says enough. Trend and turn methodology, very nice. On the 15-minute time frame, he's hanging around on the 1, but I prefer the 15 here. So 15-minute time frame, you can see the typical structure here as well, and volume followed that same pattern. So you can see the highest amount of volume sits in the leg, the sharp leg down, and then it starts to like overlap again, decreasing volume, couple more lows into an area of support, the value area low. So very good. And you can see nicely respected, good move to the upside as well. So trend and turn methodology on the 15 minutes here, and yeah, it was a nice find. So definitely worth sharing, which I then did in the update section as well. So let's go through the different levels. First of all, I'll toggle everything on just to check if I have to remove something. And of course, price touched the value area low at 106, but because it currently accessed the lower boundary of price here, I like to keep it on the chart. Also helps with explaining to public YouTube where price actually found support. So we can keep that one on the chart, but then we go to a daily time frame and see if there's any new levels. There's not. No daily levels. We have to close green today in order to get a new daily level. Then we go to ATAS. So switch the screen. Do this. So when I open ATAS, it always opens on my main window that's being recorded. I always gotta move it because of using a different email. But here we have a daily naked point of control. I think at 112,650 we already have on the chart, but this is a new one here at 108. So we can check the point of controls. 112,650 we already have that one, but the one at 108 we don't. So we can do this 108 000, just below price. So interesting area of support, and that is it really. That is it. We can check the weekly, see where the weekly is at. The weekly point of control currently is still at 116. And the monthly, this is quite surprising. It just shows how much volume was in the all-time high range here. 124K is still the monthly point of control. We're at the end of the month. You know, this was the first 1.5 week of the month, and the rest of the month did not match the volume traded at the high. Crazy. It's crazy. It probably also signals the amount of FOMO and psychological stuff that's going on as price is moving into all-time highs. So yeah, it's quite nutty, quite nutty. So that is, I mean, if this one is not going to move down to the current range today, we're going to have a monthly naked point of control tomorrow at 124K. So even though I don't really expect too much of this level, because if you do move this high, you're at the 886 as well. So probably, yeah, okay, you can get a rejection. That would be the expectation because it's in confluence with the 886. So you move up, touch the 886, take out the monthly naked point of control, which also is a weekly naked point of control. Look at the yellow bit here. And then you move towards the downside back into the range and you continue to the upside at a later stage. First of all, we got to make 124K. So we'll see. Okay, now that is then a new level on the chart, daily naked point of control at 108, which then brings us to Elliott Wave stuff. So let's go through the different scenarios. This one is invalidated. This one is invalidated. This is the, we can keep this on the chart at the moment. 1 hour multi 1-2. Let me check what's going on here. 1 2 1 2 3 4 5, possibly another 4 5. Yeah, we can track this. So Pop put the invalidation 404 on the chart. The lower low is this one. Currently at the 0.382. Nicely respected. Interesting. Turn this one off. Do this and do this. Do this. Move it up. Okay, and then use this as invalidation. Okay. So we don't actually have overlap between 1 and 4 here. It was close. And also there was no 618 touch. Oh, there was here. Wait, 15 minutes. Oh, wait, but that was before the low was made. So here price just missed out on the 618. And also here it missed out on the 618. So no necessarily invalidation for wave 4, no overlap with 1, no 618 touch. So there's definitely a running flat potentially in there. A flat is a common structure for wave 4s, right? Wave 2s, and this is just general guidelines. Wave 2s are commonly zigzag family structures. Or you could just say like sharp. Okay, now we get to the rule of or the guideline of alternation, where they typically say wave 2 tends to be short, sharp, and deep, and then wave 4 is the opposite, basically. So wave 4 is then long, shallow, and more complex. So wave 2s being zigzag family structures opens the door, guideline of alternation, for wave 4s to be sideways structures. And sideways structures can be WXY, triangle, flat. Generally, it's structures where the second leg of the correction moves down closer to the origin of the correction, which in this case would be the low. And that is also the way it's written in Elliott Wave principle, is where in a sideways corrective structure, you expect the second leg to basically come back to almost like the origin of its corrective structure, while in a zigzag family structure, you don't expect your wave B usually to go far down to the low, to the origin of its correction. So and that creates the more sideways movement that we then expect in 4s compared to the 2s. So here we then have ABC, that is the 4 flat structure running flat, and then we get a 5 towards the downside here, following the trend and turn methodology quite nicely indeed, yeah, now we have a bit of a bounce. So we'll have to wait and see what this is. We have the invalidation on the chart, of course, in case this is not a wave 4. But from a management point of view, if taken with the trend and turn opportunity yesterday here at the low, of course, now it's just management. I know Danny took a TP1 when price was over here, just before its first little range. and price here continued towards the upside locally. We'll have a look later at the local price section, see what's going on. But that's important, and I think it's really good to manage positions in such a way. Like price is moving up. Of course, the night is hitting for most of us, as most of us are, I think, European. But still, like, you know, you get a TP1 in just before you go to bed. It also rests the mind, I suppose. You know, it helps with trading psychology. Could put the stop break even, and then just see what happens overnight, and then you wake up and you're in more profit. So, you know, that's good. And sometimes you're stopped at break even, which is also fine, because that's why you took a little bit out. So 1 2 1 2. Also, that reminds me, maybe have a look at this message that I wrote somewhere. Someone asked me a question. Oh yeah, here Vayukama asked me a question about how do you approach setups before bed. So I wrote this message here yesterday, 9:50 p.m. Central European Time Zone. It's just a little bit higher here, so you can read that, which was like a general tip. So okay, we have this structure. If we do get another wave 5 down, we still have the daily naked point of control here at this low at 105. So that would be arguably a main area of support, unless 5 is going to push for the low. Preferably though, what I would like to see is if this is your 1-2s, and this is your 3, which of course arguably is quite a short 3. Well, it's not a very long structure. It makes me think, actually, how does it compare to wave 5? It's shorter than 5. It's longer than 1. Okay, so that works. So we have the 3, but then you'll get the 4s and the 5s. So what I would like to see in that case is price, of course, turning. So you start to turn, trend and turn. I mean, that's where it comes from. So we get like a structure like this. Let's put the knife, and then you pop into support, and then you go, and then the bigger structure is finished. Now you can of course look at the local structures like Dani did yesterday and be like, well, there's an opportunity here, local trend and turn into support, that's good, but we got to be aware as well that we're still in a downtrend on a 1 hour, 4 hour time frame, where from a management point of view, it just makes sense to take a couple of TPs, as there's still the risk of coming down further, or then in this case, another 4 or 5. If you do move up and touch the 618 at 112.3, your wave 4 is invalidated. So that means you're going to look at a finished structure at this low, and you're going to have a finished impulse by now, really. WX, AB. I mean, you can still have a WXY in here. The issue is that if you want to count this as a WXY to the downside, how do we do that? We need to finish something here. So the only way to count this as a WXY is when we look at a larger corrective structure. And that is stuff that I covered yesterday. In that case, you, for example, need to do W, X, and Y. ABC, W, WXY, X, and then you're looking for a wave Y, which then is zigzag. Of course, it's deep. It touched the 0.7, lowers the probabilities for a double zigzag ABC. Just to show you, take it from the start of W till the end of W. Toggle on the 0.7 here, which is touched. So decreases probabilities for a double zigzag, increases probabilities for either a flat or a triangle, and then eventually you go to the downside. We bounced at the 786, correct. And that's also true with the flat. Did I see it this? I'm not sure if I saw someone talking about the flat this morning. Maybe it was in the public group. Because generally, when I wake up, I love checking Discord, see what people been talking about. I think in Elliott Wave public, there was a guy this morning that said, oh, maybe we have the expanding diagonal followed by the flat, which of course is something I spoke about yesterday, but not in the video. So it's unknown to public YouTube, at least on my channel. So yeah, what I would like to see if we get down once more is a move ending. So basically create a trend and turn, but then on a 1 hour time frame, come back down once more. Do not touch the 618. And if price comes down here, there's definitely interest. Like it's basically again trend and turn. We can arguably look for a trend and turn setup in the final 5. So that's your 1-2s. You get the 3 and then the final 4 5s, finish 5 and go up. But of course, on a 1 hour time frame, we like to see this S like this. You go down and then you go horizontal again. That is what we're looking for. Increases the probabilities for a bounce, where generally the minimum target is the 0.382 Fibonacci at least, that you then take from the start to the end. So that is something to keep in mind. This is put on my chart, so we can move this to 1 hour bear. This is multi 1-2. I don't know. I'm not a fan of the multi 1-2 here to the downside. It just goes down too slow, too slow. It's not fast enough. You really need a waterfall. This would have been another 1-2, and by now you're gonna have a quadruple 1-2 here. I mean, you can just keep stacking 1-2s, but it's not as neat as just counting a single impulse. The directional bias would be the same as you look for another low for a 5 or a 3. It's just this, you know, it decreases in probabilities. I mean, this wave 2 doesn't have overlap with this one. It's not a requirement. Would have been nice. So we are approaching the weekend. Weekend is commonly a ranging structure. So if you would get a 3 to the downside after a triple 1-2 and arguably a fourth one right now, of course, your 3 is likely going to be quite big, of course. And then you're going to have 4 5s during the weekend. Is that really high probability case? In the, I feel more for a 5-wave structure here than a multi 1-2. So for now, I'm going to remove it. We are aware, but that's only relevant. Like the difference is here we want to see a 5 on lower volume. And if you go down on increasing volume, you got to be aware of 3. That's going to be the difference. Let me write that here. Eye on volume. Okay. What's this? Opportunities. Oh yeah. Okay, that's yesterday. So we have this one. And that. Okay, so that's fine. Now we get to the daily time frame. Let's start with the bullish scenarios. So this one is now, of course, invalidated. Multi 1-2 is out of the question because price took out that low. So we can remove this, which means that this now becomes 1. This then becomes... The numbers are not related to probabilities, by the way. It's just I had to organize my tree. So here we have bullish scenario number 1, which then is the flat structure. So you have an expanding diagonal in here on the lower time frames. I have been looking at another structure in a 1 to see like, okay, everyone's looking at this as an expanding diagonal. Is there a way to count this differently? Could there be something else going on instead of an expanding diagonal, which by itself is a rare structure? So I was like, well, you know, let's have a look. Is there maybe an impulse in here? It's not a multi 1-2, but maybe like an impulse. It's just the issue is that over here, price came back down into these highs. So there's overlap. So we can't count this as a wave 1, 2, 3, 4, 5, unless this is a diagonal. Well, if we do that and we would label this as a diagonal, 1, 2, 3, 4, and then we have 5. Let's have a look. Oh, trend-based fib extension, start of 3, end of 3, end of 4. Wave 5 is longer. And now we get into trouble because this is a contracting diagonal. Look at the trend lines. It's not expanding. And in a contracting diagonal, wave 5 has to be shorter than wave 3. That's a rule. So this is not possible, which then leaves the expanding diagonal basically, where this is a 5-wave structure and wave 1 finished at the high, which is basically the only structure for the bulls. Yeah. And then this has to be a 3-wave structure to the downside, of course, not a 5-wave actually, but this has to be some sort of like either A, B, C over here, or you need some W, X, and a Y, or whatever it is. But of course, your second leg will be very shallow, very, very short, basically, this one here. But that is going to be the corrective structure, which is fine. which is fine, but you can't really count as different. It's gonna be an expanding structure. So this is the bullish scenario, ABC flat finished, and then 1 2 with a flat in a 2 here. So as long as you don't take out 103.5, it's not invalidated. 1 second, just okay. Yeah, it's not invalidated. Yo, Jar618, what's up? Love your morning routines. Watch them from the beginning. Cheers, I appreciate it. That's what I make them for. Is there an option to look at? I think silver. I mean, of course, my routine is mainly focused on Bitcoin. We'll see what time does, because generally the routines are between 20-40 minutes, maximum 1 hour. If there's time, I can always have a look, of course. But generally, of course, morning routines are focused on my own personal routine, which generally only includes Bitcoin most of the times. But I'll try to be in a hurry and have a look. It will be quick, though, in that case. But yeah, so we have 1 2 ABC. And then, you just want to build more 1 2. So this is where probabilities for the bulls are going to change. So Jar, you can stick around. I'll have a look at the end. It's going to be a quick look, but I'll have a look. So how do probabilities change for bulls or in favor of bulls? Because at the moment, they're not, from an Elliott Wave point of view. An expanding diagonal followed by a flat. That's not a high probability scenario. A diagonal where you only finish a 1 and 2, it's not a high probability scenario. It's too early for the diagonal, and a flat after an expanding diagonal is not a high probability structure, as commonly you expect a zigzag family move. So how do probabilities for the bulls increase? Well, step 1, in this case, you're looking for 5 up, 3 down, 5 up, 3 down, and you just continue this story. And then at some point, and I got to check my other scenarios to compare, but at some point you're going to be like, well, because we have 5 up, 3 down, and every range we get, this is easiest, every range we get is a corrective structure, we're looking for higher. Yeah. And then it doesn't really matter if how people count it. You just look for price to move up. Look, this structure was also a pain in the ass. It looks very 3-wavy, of course. And then price came all the way back down here. But then what happens is you get a move up, 3 down. You get a move up. This was a WXY to the downside with a higher low in Y. Then you get another move up. You get another 3-wave down on the lower time frames. And you're just going to look for more upside because you get 5 up, 3 down. It's not stopping. So if you want to turn around, you need 5 up, 5 down. And then 3 up, and then 5 down, and 3 up, and 5 down. That's how you then change the trend. So what bulls are looking for here to increase probabilities would be to get 5 up, 3 down, and do that a couple of times. And it would, of course, be nice to take out 116, but taking out 116 is no guarantee for the bulls. So we have the diagonal as well, which can also be over here, 535, correction 535, but diagonal only really relevant if we have that 4. Let me now just quickly have a look at other stuff, because I want to, also for the video, in today's YouTube update, I actually don't want to talk about every individual scenario I have. At least I think it's too much. People sometimes already say when I share a couple of scenarios, they're like, yo, dude, please share 1 or 2. But yeah, that's just not how Elliott Wave works. I explain how probabilities change, which is therefore I share more scenarios, because if something happens, people are always prepared. Oh, we took that low, probabilities change. Now we have to think about that scenario. It's already shared in the video. Perfect. But now I, of course, have 9 different scenarios here. And then if I share 9 different scenarios, people are like, yo, dude, just pick something. So what I want to do is talk more general. So I need to have a bit of an idea here. So for this scenario here, ABC, we need to take out the low to finish wave Y, because we're looking for a zigzag in a wave Y. This is the same scenario, but you have a longer B. You still want B to at least retrace to 104.8 before looking for a move up. So in both of these, you're actually looking for upside, and at least to go back in the range. You take out the low, you go back in the range. WXY, these are shared yesterday. in case you want to have a closer look in the photos in the Bitcoin updates channel. So we have A, B, C, and W. We have our wave X and then a wave Y. This one is still quite early because there's no clear structure on wave X being any larger move. But this is the thing that even if you move towards the upside, it doesn't mean you're looking at bullish structures at the moment because price took out 106. You might as well look here at a W zigzag. You get a wave X to the downside, internally a WXY. And then you're going to get a wave Y towards the upside, which can easily be like, okay, we get a little bit of a move up, we move down, and then we get a wave C, take out 116 or whatever and go down. Now, I do think that if you take out 116, there's just not a lot above 116. We have this gap. So the first time I spoke about the highs here being resistance, but those are taken. And now we tested this gap already once. I think if we go back to 116, we feel the gap go to 120. That's my expectation. So, yeah. And that I mean, yeah. Yes. Thinking. So preferably if we would here count a W, X, and a Y, it's going to be more sideways. Not necessarily sharp, because I do think take out the high, move to 120. A flat would be nice. A, B, and then C. And then C is an impulse, so it should be sharp. It's basically this, but the other way around. And then you go to 120, and then hoopla, down you go again. That would mess with the market. But bottom line, this scenario would basically also take the low, and you still expect another leg up. So here it's take the low up, possibly take the low or 0.9, go back up. This one here, continue the range. You just continue the range. Basically, it's continue the range, continue the range, continue the range. This one over here, I mean, it does continue the range down, and then you go back up. Now, back up does not mean this. You're probably going to do ta-ta-ta, 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 and then you go up. So in other words, you continue the range. So those are your bullish scenarios. They just continue the range, and at a later stage, you'll be able to figure out what's going on. It's just a little bit too early now. Because price took out 106, it's a struggle for the bulls. Taking out 106 basically leaves either a flat after an expanding diagonal or a diagonal. Both don't have the highest probabilities. The bulls are really looking at the moment for larger corrective structures at this stage. And if it's going to be bullish, either this one here or diagonal, we'll figure that out later. That's going to be something for later. That's not the highest probabilities at the moment. Flat after an expanding diagonal. I mean, expanding diagonal by itself is rare, let alone then also having a flat after an expanding diagonal. So, you know, if you take out this high though, this one, you're at least aware, like, sure, it puts a little bit of probabilities in a bullish basket, because at least there's the door is still open. If you take out the low at 103, all the doors are closed. And then the bulls are really just looking for larger structures. Take the low and then move up. You basically continue this range. Take the low up and then down again, and then go up. So again, continue the range. Here you can take the low and move up. So it's all gonna be, it's all gonna be take the range, or take 106, take the low, but you expect a larger range. This makes trading the scenarios also a bit more tricky, because the bulls at the moment don't have the higher probability. But if you move up in 5 and 3 and 5 and 3 and 5 and 3, at some stage we're going to be like, the bulls have the higher probability. But that might only be here or only be here. But that's no problem, because we trade probabilities. If you do create a multi-1-2 here, diagonals have lower probabilities than a multi-1-2. So if you get a diagonal shape to the upside, got to be aware of a multi-1-2. From a trading point of view, it becomes easy. Your stop loss is below the previous wave 2, and you're looking for price to move up. And if this is a wave 3, it really doesn't matter that you enter later. because you're expecting a large move, right? And your stop loss is below the previous two, because that's just your hard invalidation. It's the same here, where if one did not enter here or enter here or enter here, there's still like 1-2s as price is moving up. This being the WXY, well, imagine that is like entry. You put your stop below the previous two and you trade up. You eventually get that 3. And you're already looking at a 1. What is this? If you go to the tippy top, of course, that would be perfection, but that's a 1 to 5. Imagine you are not perfect, because no one is perfect. You have a 1 to 4. RR, and that is when you only join here. That's a great trade, no? That's a great, you don't need to catch the lows in order to catch the move in the middle. And that's similar here, where it will take time for the bulls to now get the higher probability, but once it becomes clear, there's still enough room. There's enough room to play with. And if you do move down, you get that diagonal shape, but you move down, then you're going to be looking at this. Or a corrective structure. Or a corrective structure. I'm not really looking at 1, 2, 3, 4, 5 at the moment, as you can see. I'm looking at multi 1-2s or diagonal. Not really looking at a single 1, 2, 3, 4, 5 for the bulls. If we get it, it's going to be the same story as here, though. Like, the thing is, regarding probabilities, if this would be a 1, 2, and you start a 3, on the lower time frames, you're going to build 1-2s. You need to build a couple of 1-2s before you start the 3 anyway, right? That's same with all the moves. Couple of 1-2s over here. You get your like 1, 2. We go down. Couple of 1-2s. Couple of 1-2s. So generally, before you start the 3, you see some lower time frame 1-2s anyway. So that might then create a more local opportunity. But the problem is for bulls that if this is a 1, 2, you get a 3, 4, 5, then guess what? You're going to have the same here. You turn around again. So will you really escape the range? Probably not. If you want to escape the range, you need a multi 1, 2. If this is just for the bulls 1, 2, 3, 4, 5, well, you might as well just miss it, because probabilities, unless you find an opportunity on the lower time frames, and then you get some like a bit of trend and turn again, price reverses, and you're going to get a correction, and you're still in the range. And then you can just enter here and then look for price to move up after, if it's a corrective structure to the downside, of course. So the bulls, it takes time, but they have opportunities later. Yes. If you take out the low, everything is going to be, bulls are going to be like, yeah, just give me a larger range. You have probably at this stage, if bullish, if looking for continuation bull market, I think you don't only have days. I think you probably have a few weeks before there's really anything conclusive for bulls. So patience will be tested. Yeah, multi 1-2 takes a little bit of time, especially once we're at a 1-2 that changes probabilities for the bulls. Diagonal takes time. You're going to be in this range for a long period, right? Your first 1 and 2 here is already half a month. It's already 2 weeks. So imagine you get a 3, 4, 5 and a correction in 2. You're going to be talking about the end of November, easy, if not the end of the year. Multi 1-2, couple of 1-2s. First 1-2 is 2 weeks. Second 1-2 would be maybe 1.5 weeks. Third 1-2 is maybe 1 week. You're still talking about mid-end November with multiple 1-2s. So and these WXYs is just, can take even longer. Now the bears are quite simply looking for big moves down. I would like, if bearish, if this is the end of year 2, what I would like to see though is price to take out this low. Just get 5 down, 3 up, 5 down, 3 up, and then you go. Ideally, I like to see this low taken, just because like it's common for a second 1-2 to take out the origin of the end of the first one, but it doesn't have to happen. Like a good example would be this range. You can check this, but this range here, 1st of Feb, this one had some 1-2s internally to accelerate this move. So eventually this was 1 2 1 2 3 4 4 4 5. But of course, this is quite a big move, so you need a few 1-2s to kickstart this structure. And that is what happened inside this range. So you don't need to take out the low to get another 1-2, but would be nice for the bears. The bears really need they need some acceleration. And also here, by the way, you're still looking for still a bit more ranging. Even if you go down, you still get a 2 up. What I'm looking for. I'm not looking at this at the moment. So even in a bearish case, there's still time. There's still some time. I still would look for a 1 and another 2, still another correction, and then you expect price to move down. If this is corrective, that's a problem for the bulls. Potential 5 down, 3 up. But the 3 up will take some time again. And this even takes more time. So now you're looking at a 1, sideways 2, and then eventually you go down. Another 1, 2, and then you go down. So I think a big conclusion here is on the daily that there's time. You don't need to be necessarily very bullish, very bearish. It is true that the bulls don't have the highest probabilities because 106 is taken. The invalidation for bulls is not taken. That's 103. But the bulls do have limited options, and it will take some time for the bulls to get the probabilities in their favor because now we need more information. And again, Elliott Waves, and I said it yesterday, it's not about in the lounge. It's not about sniping the highs or the lows. It's about playing the probabilities and then find an opportunity in favor, of course, of the probabilities. So if the probabilities appear for bulls later in this range because you need a couple 1-2s, then you just enter later in the range. You don't need to try and catch the low, right? That's what greed wants you to do. If you here grab one of the final 1-2s before a breakout, and your invalidation, look how long the invalidation here is for the sake of the example as well. This is still 1 to 4, 1 to 5. You don't need a 1 to 10 or a 1 to 100. Yeah? We're in it for the long run, no? You can even wait for, here, this was an 886 touch retracement. Was that a golden pocket retracement? Double check. Double check, double check, double check, double check. No, it missed out on the golden pocket, at least with that one. I take this. Okay, that's nice. But yeah, 886 moves back down. Even if you enter here, your RR would actually be even better, of course, because now your latest 2 would be down there. But yeah, there's opportunities. You know, you don't need to catch the low in order to have a solid RR trade. If you're going to build multiple 1-2s, we'll figure it out at a later stage. But at the moment, bulls do not have the higher probabilities. They may get it later, but they don't have it at the moment. What's this one here? This is just ABC, very simplified. A, B, 1, 2, 3, 4, 5, C, go back up, or A, B, 1, 2, 3, 4, 5, C, and go back up. So, and then the up is motive corrective, we'll see. And I think that's basically the conclusion on Bitcoin, on the daily time frame. It's just time. It takes time. There's many different scenarios. I just tried to simplify it by saying, like, it doesn't really matter what you're looking at now, because Bitcoin is very likely going to stick around in this range for a couple more weeks at least. For the bulls, the bears could see Bitcoin drop, then move create another wave 1 and 2. Now that wave 2 likely goes back into the range and is not allowed to move beyond 116, but it can easily go to 111, 112, 113 before then moving down. So you're still going to be in the range before then later you go towards the downside. So even for the bearish scenarios, you're still talking about days or week or 2 weeks at least. So there's time. On the daily, there's no hurry. There's no hurry. There's no such thing as being late. there's only a thing which is called just probabilities. There's no late, there's no early. It's just wait for probabilities, and sometimes probabilities are just not clear, or they're not high for bulls, and then they become higher for bulls. That's the way it is. On the weekly time frame, do you assess the fib time of the possible wave 4 we are in? Yeah, so on a weekly, of course, I have a multi 1-2 count here, but in general, I'm just looking for 4-5s. That's just my like, I know that this wave 2 has a wick on Bybit. On most, like, Bybit is the wick chart, so, you know, bullshit chart in my opinion, but many charts just have a higher low here. But still, even if I remove this 1-2, I would just put this 1-2 somewhere else. But it's mainly, the main thing I'm looking at here is this. And I don't really care too much on how I should count it, because this is the overall narrative that I keep in mind. Just like the previous bull markets. It's exactly the same structure. It's trend and turn, right? Like, and a bull market, bottom line is a trend. So you would expect a similar structure. And you can get the blow off top over here, which we did not get in this bull market here, by the way. That might be an option here. You could get a blow off top and then go down. But I think, and this is why trend and turn is so easy, instead of trying to count this structure in detail, oh, where are the 1-2s? Where's, like, this is just a general, it creates the narrative. It creates the directional bias that, well, we might still get a blow off top. Well, that's possible. But if we do, it's the final one, and we go back down, and then, yeah, I mean, this range has not actually really been tested. I think we just missed overlap. So it would be interesting to go to at least 73 down to 50 as a bear market target. just above the gap. It's actually interesting. I never actually checked. So here we didn't retrace to the gap. We stayed in the 4s. Here price retraced back to the bottom, middle of the gap. So we'll see. Not really a lot of information of previous bull markets, but I think this is just the general narrative. Instead of looking at the exact count, I would keep an eye on this. Might be multiple 1-2s, multiple 4-5s. Some people are looking at 1, 2, 3, 4. 1, 2, 3, 4, and then 1, 2, 1, 2, 1, 2. Hey, another 5 up, 3 down. Boom. Put a sticker on it. 1, 2. Yeah, I'm not that bullish. I like to be more neutral. If we're going to be moving into 1, 2, 1, 2, and we get a large 3 up and 4 5s later, that's perfect, that's fine. But then we'll take it range by range. No, we eventually get to move up, we get a range. Should be corrective. Up, range, corrective. Up, range, corrective. Up, range, corrective. And every time it's corrective, we look for higher. Till the one moment, it's not going to be corrective. And that's where everything changes. And over here, we have a 5-wave move down. Now, this still very much looks like a flat in an A, B, and a C. You know, 3, 3, 5. It looks very flatty. So as long as bears cannot create another 1, 2, I would still favor the bulls on the daily time frame. Even though the exact count for the bulls requires patience. But what I would like to see for the bears, to really give bears the higher probability, is get 5 down, 3 up, or larger range, but this takes time. So the bears will have higher probabilities later, and then we create another 5, 3 up, and then down. So yeah, but that is like on the daily time frame. I would still prefer a flat here. The bears just need another 1, 2, maybe another 1, 2, and that's where the probabilities really stack in their favor. What this does here is the bullish probabilities of this move up are reduced. But this move down is not yet enough to give a bear market the highest probabilities. You really want another 1, 2, or at least impulse down, correction up and down, preferably take out that low. Like there's a few steps still to take. So my bias is still bullish unless we start getting another 1, 2, or at least 5 down, 3 up, which can slowly start favoring the bears, and that's where it becomes dangerous. From an investment point of view, this being a flat would have higher probabilities, but this not being higher probability bullish, I can imagine people be like, well, I'm not very comfortable here, right? We're really on a thin line. I take my time, and that is where the bearish and bullish scenarios here are made for. Is the bullish scenarios require time, couple 1, 2s, well, I don't care if I have to re-enter here because I expect a large wave 3. I'm still part of the move. I don't need to grab the low. If this is a diagonal, we'll figure it out. Takes time as well. You're going to be stuck in this range for a long period of time. And all the other scenarios are also just going to be like, you're going to be in this range for a while. So there is time. There is time. I think that's important. So, okay. I think that's that really. 50-minute time frame. So we have a bit of a move to the upside. Where's the resistance here? Time, keep an eye on time, 50 minutes in. Bit of resistance, daily naked point of control at 112. Currently we're at the previous range. Point of control, value area high, 111.3. Where was the invalidation? Oh, still higher. If price can make it to the daily naked point of control, it would invalidate this wave 4. Okay. $618 is not touched. There's at least potential for an impulse. Being then 1, 2, 3, 4, and 5. Yeah, I mean, look, you currently have a 1, 2, 3, 4, 5 wave structure. So the thing is that you're either looking at a 5, you get a 3 and you look for another 5, or it's 3 wave structure, but you took out the high, which now means you're going to be looking at W, X, and then a Y, which then basically means X, and then a Y is still another move to the upside, which can be sideways if X is deep enough, or you're going to get a double zigzag to higher prices, but you're still actually looking at a probably a little bit higher, or at least a larger range. Did we now touch the 886? Ooh. Nah, just missed out. So that is basically the local stuff. You can count a 5 in here, you can count a 3, and then correction, maybe get another 3 up. WXY, double zigzag, sideways WXY. Weekend is coming, but that would be the bias here. Is not yet, doesn't look finished. Doesn't look finished. The most bearish, arguably, would be WX, ABC. That's your Y, and then you go down. But then you would still like to see the highs taken here. So for a new opportunity, I'd only look here. This was an opportunity yesterday. If price can move back down to the daily naked point of control, that can be an opportunity. That's support. Okay, I'm late for class. What's up, Ryan? Quick look at silver. I have no idea what is it this per Oz? Or is it commodity CFD? I have no idea. This one, I guess. The question was having a look. Okay. 1, 2, 3, 4, 5. Correction. 1, 2, 3. Sharp 4. Sharp 4. 5. All-time high. All-time high. So far, yeah, like silver has been actually quite rangy. Like it's never really escaped the boundaries of the range clearly. And then I'm talking about this range here. This would be your typical cup and handle, of course. Da, da, da. This surely looks like possible multi 1-2s, 3, 4, 5s, and the trend and turn. And then we'll have to wait if this is A, B, C, and you go down, or if this is 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, and 3. Because that's why I pulled the trend and turn here, because I don't yet want to include this. Is this a wave A or is this a wave 1? We'll see, because this just has to continue extending if it's a wave 3. At the moment, though, you're vertical, so price needs to either break structure for bears. You need to break structure, or it has to slow down. No, so we currently have this. You can see it's going up, up, up. We wanted to do this. I mean, if you want to see it slow down, of course. That is what we would like to see. Oh, volume doesn't work, but one can imagine volume here is high. So high is taken. This is proven corrective. It's a fun example, because the probabilities for potentially the bulls only really changed with this retracement. Because you can definitely look at this as a potential impulse. 1, 2, 3, 4, 5. Basically, like you have a 1, 2, 1, 2, 3, 4, 5, 4, 5. Even though this 4 is very long compared to 2, there is the potential of an impulse. So that's why, like down here, this would be, again, I mean, look, I really hope TNT makes life simple for people, because you don't need to count everything in detail with 1-2s. Here's your overlap. Here's your acceleration. It also creates a bit of a gap. You accelerate here. And this is, again, that's your ending range, blah, 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 blah stuff. So what then, of course, happens is you're looking for a retracement back up anyway. That's going to be directional bias. Minimum target is the 0.382, which was not touched with this high. Not touched with this high. So you're still holding, right? And as price moves up, this is the first time you touch it. So when looking at trend and turn, this is your start. You accelerate. Here you start ranging again. More lows on lower volume, most likely. The volume indicator doesn't work here. But purely based on structure, you start to move sideways. The speed goes down. So this is going to be area of interest. Oops, see there's the area of interest is here, right? Maybe you just like spot. And price never made it to the 0.382, which commonly is at least a minimum retracement target. It fell short. First time it touched it, boom. And then, of course, it's just management. But then here, and this is for the bulls, there's the potential of a 5 down and then eventually get a 3 up. Maybe this was a flat and you're finished and you go down. But if that's the case, you need a 5 wave to the downside, which didn't happen. Look at how much overlap there is here as well. Especially as price then came back down here, touches the 886. Wait, this might actually be, 1 second. Where is it? Yeah, touch the 1.618 as well. That's quite neat. Down, up, down. 1.618 goes back up. touch the 886, not looking at a multi-1-2 anymore, takes out this high, probability is higher for upside. But this is arguably area of interest. Look for this high to be broken, which then happens here. And then look at this, it's like 3 waves down. 3 waves down. 886 touch here, 886. Maybe this is an 886, not sure. This surely is one. So your bias is like, it's up. And now we're here. So yeah, I mean, currently it's accelerating. I don't see it slow down. I mean, look, there's a bit of a drop here, but this can just be another 4. For this being a 2, you create a 4, 4, 5, 4, 5, 4, 5. Maybe you just started to 4 5s. And this is your 1-2s, that's your 3, and you're only in the beginning of your wave 4s and 5s. But you need more proof for this. So for bulls, you just want the 4 5s and continue. Bears preferably change the structure. If you change the structure, this would be very bearish, actually, because then you're probably going to look at something like a WXY or ABC instead of an impulse, which means this turns into a bigger flat. And then, yeah, cool. See you back down, you know. So as long as the trend isn't changing, bullish, wait for 4 5s. Currently, the structure is steep. So that's with regards to silver. Okay, that's going to be the morning routine. Oh, price actually moved up and took out the high, it seems. So that is the routine. We updated the analysis and chatted a bit about everything. So yeah, that is that. I gotta figure out how I'm gonna organize this in a public YouTube video without covering 9 different scenarios. I think I really gotta try and make things simple in a way, because covering 9 scenarios is gonna be problematic for public YouTube. It works in a private setting, but yeah, I need to think about the generals. I'll do that off the stream. From the local high on the 1 hour time frame, we got an impulse down. Looks that it is making. Oh wait, you're actually talking about local time frame on the silver. I mean, I gotta go though. Gotta go. But yes, there's definitely an impulse. Look, 1, 2, 3, 4, 5, 100%. I mean, that's actually a very clear, very clean impulse as well. Not too shabby. Volume moving down as you create a low. This is yeah, it's very typical. So yeah, 1, 2, 3, 4, 5 correction. 1, 2, 3, 4, 5. Your main resistances are wave 2 of a lower degree and wave 4 of a lower degree. Those are the main areas of resistance. But yeah, it's a clean 5 down. And now you gotta wait and see if you get strong continuation, or is this going to be an ABC? The thing is that on a high time frame, the lower movements here, of course this matters, but really you just want to change the structure, like move back below 36 or something. That would be a bit of an issue. As long as you don't really get that, you know, this wouldn't be a place to buy. You moved up, I don't know how much percent, like almost 100% since April. I mean, this is not a place to buy unless you get another opportunity because the local range is higher probability corrective. But when you are an Elliott Wave analyst and you see this, you're like, hell no. Yeah, no. I'm good. I'm not interested. Yeah, I'll stay on the sidelines. I'll sell a little bit or whatever. I'll sell everything, but wait for a new range. This is what I always say in live streams on public as well, is take it range by range. Eventually you're going to get a drop. If it's a 5-wave structure, wait for the retracement, selling opportunities. You're still in an uptrend, of course. So, you know, a shorting has to be done with great care. But this wouldn't at the moment be a place to buy. I would be interested to buy only if we get more information where probabilities change in favor of price moving up. You now have a 5 down. So if you get a 5 down, a 3 up, a 5 down, and then you go back up like this, you're going to get a K16 principle, which not everyone may know yet. But basically you go back down, three-way structure, come back up, break the structure, and then you continue. So it takes maybe some time. But yes, I agree. This definitely looks like a 5. You can count a 5 in here. It's very clear. So you got to be aware of the potential of 5, correction, and 5. And if bullish, you'll know it at a later stage here. But that move is not yet. So this is difference in time frames. The 1 hour time frame will not change the probabilities on the weekly yet. You just need to change the structure on the weekly. Good morning, Umar. Okay, it's time for me to wrap it up. 1 hour, 3 minutes in. Gotta start making public YouTube content, but I actually first I gotta write in the update section. Yeah, I mean, there's not too much. Yeah, I mean, the new level, all the scenarios were shared yesterday already. So I will write in the update section, and that will be my my test for the public YouTube video, because I gotta try and generalize 9 scenarios into some simple stuff without sharing 9 scenarios to public YouTube. So I'll try to write things down in the Bitcoin's update section where I probably will talk a bit more about levels and time compared to necessarily every specific option, just to simplify the analysis of yesterday and all the scenarios. So okay, yeah, that's that morning routine live, first time. We'll do this regularly. Of course, I'll still mostly do the videos, because the videos are a bit more efficient time-wise, but we can definitely regularly do the live streams as well. So people can ask questions once or twice a week. It's always fun to do like a morning routine live stream or something. So, and I love live streaming. I really enjoy live streaming. That's sometimes while I'm online for hours on public YouTube, but it does, you know, because of my enjoyment, I forget about time and then I get into trouble. So you know, I got to be aware. Oops. So thanks everyone for joining in. Whoa, morning routine stretch coming in as well. Yeah, cheers. We will speak to each other in the group, of course, the remainder of the day. See what the day brings as well, and see if Bitty is gonna show us anything interesting on the Friday before the weekend hits. So thanks for being here, and yeah, I speak to you guys in the group.